Hi everyone, this is Jitan here and welcome to another episode of Traders TV. In the last episode, we talked about how to grow a small trading account. And after speaking to so many of you on the trading floor, I'm amazed at the impact that it's already made. By the end of today's video, we're going to be talking about the 4 reasons why you must only trade the trend to start out with. So without further ado, let's get to it.
There are so many different ways to trade the financial markets. But today, I want to show you the 4 reasons why you must only trade with the trend to start out with. The first reason is this: trends form based on natural factors. And what I mean by that is the fact that markets are based on the thinking of a collective group of individuals. When you look at your trading platform, when you look at the charts, that involves every single buyer and seller in the world. It involves me, it involves you, it involves the Goldman Sachs traders, the UBS traders, the Bank of England traders, all the central bank traders. It involves absolutely everyone in the financial markets. We see all that data there in front of our screen. So that's obviously very powerful, okay? It almost levels out the playing field, especially in the foreign exchange market. Now, the reason that is useful is because we know most individuals are irrational. Like it or not, most humans are irrational when it comes to risk taking or making decisions about risk. This creates what we call a herd mentality. And this is why trends can last for quite a long time and why they form on natural factors, because of the herd mentality. Basically, the herd mentality is the fact if other people are buying this, maybe I should too. Just like when the new Apple phones come out, if you don't have an Apple phone and suddenly all your friends start getting Apple phones, then you start thinking to yourself, well, maybe I should buy an Apple phone too. It's the herd mentality which creates trends. And this is important because we're not going to move the market. You may look at the market thinking, well, it shouldn't be trading at this level. It should be trading much lower than this. Why is this market going up? It doesn't make any sense. But we're not going to move the market with our analysis or our decisions or our beliefs. So in order for us to achieve our outcome of making money from the markets, we have to be what we call trend followers. Okay, we have to trade with the trend because the trends form on natural factors. At some point, the trend is going to end. There is that saying, trade the trend until the bend at the end. But it trades on natural factors. It's something we definitely want to get involved in because then we're trading the human mindset, we're trading the herd mentality, the collective group of individuals, the psychology of their thinking. And that is very powerful. That is going to allow us to be consistent in our trading over the long term. And there are another 3 reasons why we should also just be trading the trend when you first start. And the second reason is this: they provide what we call higher reward to risk setups. So basically, reward to risk means how much reward you're getting relative to the risk you're putting on the table. So for example, you may risk 1% of your trading account to make a 2% return. That means your reward to risk ratio is 2 to 1. Some people may risk 1% to make 3%. That's a 3 to 1 reward to risk. Now, the reason reward to risk helps us is because traders can lose more times than they win, but still make money. Let me just repeat that. You can get your trade wrong more times than you get it right, but you can still make money at the end of it. That is the power of reward to risk. Clearly, we should be using it. Okay, it doesn't make any sense. Not many free things out there in the world. Finding reward to risk setups is free. Okay, so we need to be using it to our advantage. Now, markets are random, believe it or not. There are predictable patterns. Okay, but remember, it's just probability. When we trade something, we're trading probable outcomes because in effect, the market is random. It can do anything it wants. So it's important that we have a good probability on our side. We want that probability which tells us that actually, if we're trading at a 3 to 1 reward to risk, so every time I win on a trade, I've made 3%, okay, plus 3% of my capital. Every time I lose a trade, I've lost only 1%. This tells me that if I lose 7 trades, okay, if I lose 7 trades, I've lost 7%, right? Because each trade I've lost minus 1%, I've lost 7 trades, so that's 7%. And if I win 3 trades, okay, then on each trade I've made 3%. I've done that 3 times, so that's 9% gain. So in effect, I've lost 7 times. I've only won 3 times, so I have a 70% loss rate, but I've still made 2% profit. Okay, so clearly reward to risk is a game changer, and trends allow us to find higher reward to risk setups, which is why it's the second reason you must only trade with the trend when you first start out. Now, of course, not all trades will give you a high reward to risk setup. So people start complaining, well, this trade didn't give me a high reward to risk setup, or there's a level of resistance in the way of me getting a 3-to-1 reward to risk. But you're not going to get every trade right anyway. Okay, you don't have a crystal ball. You're not going to get 100% success rate. So you may as well accept that fact and actually start using probability to your advantage, because it's going to be a game changer to your long-term success. Certificate number 3, trading the trend also provides a high return on time. So going for the longer move or the bigger move means you can have what we call a more passive approach toward your trading. So you don't have to be there every minute of the day looking at trades, trying to get in, trying to get out. Some people are active like that. We have a lot of day traders who are active like that. But especially when you first start trading, it's much better to be a bit more passive about your trading, so you can learn how trading works, how the markets move, and find out what your best approach is. Okay, and I think most people understand, or most people get into the markets not because they want to spend more time looking in front of a chart for very little or uncertain return. Okay, so you've got to make sure you maintain a high return on time. The way I look at it is this. If, for example, you've made a 2% gain at the end of the month, at the end of the week, okay, so 2% gain at the end of the week, really good return for the week. But if you've spent 6 o'clock in the morning, to 6 o'clock in the evening, just looking at the charts, not even moving from your desk, so it's 12 hours a day. So by the end of the week, you've spent a lot of time just looking at the markets for a 2% gain. It may not seem worth it if you're starting with a smaller account. So what happens then is the fact that you get frustrated, even though you've made a positive result. You've made a positive result, but somehow you still feel frustrated. And I see this happen all the time. People have very good results, and then they start to feel frustrated because they haven't maintained a high return on time. So the key thing is this: you've got to manage your own state. Okay, less is definitely more in the financial markets, because overtrading kills most new traders that I see. Trading the trend and sticking to the bigger moves will help deal with that urge of constantly needing to trade. Now, sometimes I might take 8 to 10 trades a day if the market is very active, but on some days I might only take 1 trade in a day. Depends on what the market is throwing out to me, but I always try to maintain a more passive approach to my trading, because the more I try to trade, the more pressure you put on yourself and the more irrational your decision making becomes. If you have more of a passive state, then you start trading for fun. You start following the process, risk managing. You start doing everything for fun. The results become a lot more natural and a lot more stress-free. And that's important when we start scaling up our capital. When you start going from, £1,000 in your account, to £10,000 in your account. You need to make sure you're going to be in the right mindset to able to deal with a larger sum of capital, and then you may go to 100,000 and so on. Okay, so in each case, you need to make sure you have the right mindset. So trying to go for strategies and trading that provides a high return on time is going to be an essential ingredient to your long-term success. So let's have a look at the fourth one. So the fourth one is this: trading the trend helps give us a focus. Now, why is focus important? Well, it's simply impossible to track every single market and everything that is going on within those markets. You're just not going to be able to do it. You can look at it every day. It doesn't mean you're going to learn anything from it or absorb anything from it. So you have to have a focus. The focus allows the market to come to us. because we already understand this market is in a trend, this is what I want to trade, then we allow the market to come to us. So then what happens is that we become far less reactionary to markets going up and then down and up and then down and up and then down. And we become more anticipatory. So we can identify a trend, and because we know that the markets and trends form on natural occurrences because of the herd mentality, we can, capitalize on that move to the upside and be a bit more passive with our trading approach. Makes such a huge difference, because ultimately this allows what we call higher quality decision making, because then you're allowing the market to come to you. You already have a focus. This is what I want to trade. So you're going to be maintaining, by having a focus, you're going to be maintaining a high return on time, and you're going to be maintaining a high reward to risk. Now, too often people say, well, the foreign exchange market is so volatile, it goes up and down and up and down, the market does not trend. Well, let's have a look at some of the most recent trends that have occurred in the foreign exchange market, and then you'll understand the opportunity that is available. Let's have a look. So here's a chart of euro against the Swiss franc. I'm just in the SMARTCHARTS platform and I've gone to euro Swiss franc. Why have I gone to this one? Because it's something that we've been trading for such a long time. Because you can see the trend here is pretty decent. Okay, over time it goes up. Our job then as a trader is to do what we call buy the dip. So every time it dips down, we're looking to buy it low and sell it high. So we're looking to identify these points if possible. Okay. Now we may not capture every single one, but certainly we're going to capture the right ones. Okay. In most cases, because we have a trend here. So it's almost like foolproof, because the market is already going up. It's almost played its hand already, that it's so much easier to capitalize on this. The great thing about trading the FX markets is the fact that you can also use the same skill set or very similar skill set to then trade indices. You need to know a few more extra things when it comes to index markets, but if you look at something like the US 30, for example, now you can see here we've got a beautiful trend going up. Okay, so you can see if we can manage to get in at these dip points where we can buy it low and sell it high, we can be a lot more passive in our approach to trading. Yeah. So for example, if we were able to get into a position here, yeah, then if we hold that position, we've maintained what we call the high return on time, because we don't have to trade this every single day. We just take this one position and we just leave it. We just hold on to it. We have a trading stop loss perhaps. So if you know what trading stop loss is, there's a few other videos in the series which explain what trading stop loss is. It's a way we can maximize our profits whilst minimizing our risk whilst the trade goes in our favor. It also helps us maintain a high reward to risk, because if we're getting in here and getting out here, we're going to be making a lot more on the trade than we risked initially, right? So it meets the rules. And again, because other people are buying this US 30, yeah, other people will be buying the US 30, the herd mentality. So it follows all the principles that we want, and it gives us a focus. So some people may just take the passive trade, but then some people may say to themselves, well, actually this is trending up, because I am quite active, I'm going to go down and I'm going to be a bit more active and I'm going to build positions all the way up here. But at least you have a focus now. You're not trying to hunt through loads of different trades across all the different markets that are available. Right, you've just got a clear focus and you know what you're doing every single time you log into your platform and you're looking for trading opportunities. You have that kind of focus. So there's just a couple of examples of the markets that are trending right now as we speak, and the markets have been phenomenal in recent weeks and recent months. Even this year, the equity markets have been fantastic, and a lot of currency markets as well have been good trends. So those are 4 reasons why you should only start with trading the trend.
So I hope you found that video to be of use. If you're looking for a little bit more advanced information, or if that was a little bit advanced and you're interested in what your next steps should be, then click on the link below and attend one of our free Forex trading workshops where you can speak to one of our traders live one-to-one. In the meantime, watch out for next video, because we're going to be talking about how you can trade like a central bank. So that is definitely something you don't want to miss. I'll see you next time.